Ashwin.
How are you?
Hi, Ashwin. It's good to see you again. We're right smack in the middle of the Lunar New Year celebrations, and I'm sure you have an interesting announcement to make, which is why we're online today. Would you like to say something about that?
Tessie, today is the Hokkien New Year, and I think for me, it's a double celebration. I'm pleased to announce that after much persuasion, our management has agreed to give retail investors a taste of what we call high-frequency trading.
What is that, Ashwin? High-frequency trading. High-frequency trading.
High-frequency trading, also known as HFT, or systematic trading, is an automated trading platform used by large investment banks, hedge funds, and institutional investors. This strategy that engages in powerful computers and servers and the fastest technology uses this system to trade large numbers of orders at extremely high speeds. Now, hitherto today, high-frequency trading in the market is only for people with at least 20 million US dollars. Okay? So in 2018, about 2018, we brought it closer to earth to say we only require 3 to 5 million US dollars. Well, today, we have brought it even closer by opening up high-frequency trading to retail investors for as little as 100,000 US dollars.
I see.
We've come a long way. Yes, we've come a long way. We've come from this high to middle level to now everyone can have the piece of the action.
From what I understand, high-frequency trading is only available to high net worth individuals with more than 5 million US dollars.
Yes. No, not even 5 million. It's 20 million.
Banks.
No, high-frequency trading is not your normal investment, 5 million private banking. No. High-frequency trading is only available for investors with at least 20 million, not 5 million. Let me correct you there.
So you have taken
5 million is not good enough. 5 million is not good enough.
So you have taken it to your private clients with that amount?
Yes. So it was only 20 million at first. We took it down to 3 to 5 million.
Okay. So may I ask
Now we're the first ones to take it even down to only 100,000.
So may I ask, what gives you the confidence to offer this product to your clients?
Let me explain to you. The high-frequency trading in the market, again, is algorithm machine only. When you do high-frequency with us, it's 75% artificial intelligence, 25% human brain. That is the difference between the market's high-frequency trading and our high-frequency trading. And because it's not machine only, we don't trade every day with this kind of opportunity. We strike once or twice or even 3 times a month enough. I'll give you an example. On 7 February, we bought a company, a stock of the company called ASML. It's a chip company in Europe, between 561 and 565 euros per share. But we did not pay the full price. We only paid 10% of the actual amount. So as little as 60 euros per share, we bought 5,000 shares per client. Okay, I'd say 562. In the next 3 hours before New York came in, this stock went to 577.90 euros per share. So our clients were making about 15 euros per share. We bought 5,000 shares. The moment the price went up, we liquidated, and our clients made about 250,000 US on this trade, with the outlay of 50,000 US dollars. I'm showing a real life example on the 7th of February. Now guess what? Like I said, you must strike while the iron is hot. The next day, 8th of February, that same stock dropped from 578 back to 562. Window closed, opportunity over. So our algorithm is mining data 24 hours a day. We are always watching out for these kind of opportunities. And these opportunities are reserved for clients who have a committed capital of about 80 to 100,000 US dollars. I won't say 50,000 because it's not enough. Why? Because at one go per trade, our commitment of the capital is about $25,000.
So who would you say would make your ideal client for this product?
Someone who is hungry for returns and someone who doesn't mind taking higher risk. You see, it's very simple in the markets. There's no such thing as low risk, high returns. There's no such thing. Anybody who tells you that is a lie. High returns, high risk. Low returns, low risk. It's very simple. But again, I ask you, before I say that, what kind of risk? I'll give you a beautiful example now. I'll give you a free tip. Microsoft has just become the ideal candidate for high frequency trading. This tip that I'm giving you right now is worth 25,000 US dollars. It's real. This is not science fiction. This is not metaverse. This is not Walt Disney. This is real. The reason the retail investor never got a chance to experience and taste this because it's only meant for $20 million.
Yeah. So I must say that time plays a factor in this equation. It's quite critical.
Yes, gamma. We're trading gamma. You're right.
One is able to wait it out for the right timing to get in and to get out.
Yes.
And if should the markets turn and one should experience a paper loss, then it is a matter of time before you can exit and recoup your investment and perhaps make a profit.
Yes, so let me explain. Ideal is time. You get in, you get out. Actually, our window is 1 to 5 days. Of course, we want to do 1 to 2 days. Even 1 to 5 days can. It means you make more money. What is the risk? Let me repeat. Let me reiterate here. The risk is not actual loss. The risk is more time. You will not lose money. I won't use the word guarantee, but you will not lose money. You may have to wait longer for your profit.
Correct. So
in the meantime, until you realize that profit, it'll be a paper loss. That is the risk.
I'm curious what made you decide to offer this to retail clients?
Personally, no, I'm not boasting here. Actually, personally, we don't have to do this for retail clients. Let me explain to you why. We are putting more on our plate and we're giving ourselves more stress. That is why my management says you have to charge them a performance fee when they make this kind of money because otherwise nothing makes sense.
Yes.
Personally, I don't have to do this. You know why? Because a $3 to $5 million client can afford the risk. When we do it for 100,000 client, our stress is more. We have to make sure of so many things. You know, we don't have to do this. But
because I'm aware,
I'm trying to push the buttons here to say, I'm putting our algo to the ultimate test. We are trying to show the man on the street that we are that good.
I'm aware that you offer this $5,000 annual fee retail program.
That's normal investment.
Yes, for a conservative client, conservative risk profile.
Yes.
For up to $100,000. That's the
normal trading.
approach.
Normal trading, 5-10 trades a month, small trades, 20-30 shares.
And this is different in the sense.
This will be like 5,000 to 10,000 shares per trade. It's different profile. Different dynamic. You're not buying 100, 200, 500,000 shares. You're buying 5,000 to 10,000 shares per trade.
So let me clarify again. Let's draw the distinction between the conservative package, the $5,000 annual fee for conservative normal trading, easygoing trading, where you get a yield of maybe 20% per year. And this one, high frequency, which is a higher risk product, and we will see a potential yield of maybe how much?
They're talking 5% a month.
5% a month.
On dollar terms, about 5,000 a week.
With on 100,000.
10,000 a month. 10,000 a month.
On 100,000 US dollars.
Yeah, but we don't take the entire 100,000 US dollars. On 100,000 US dollars, we take a position of 50 to 80,000 US.
Okay, right.
Like last week, on 7th of February, the outlay was 50,000 US dollars.
Okay.
Clear. On 50,000 US dollars, our clients made 250,000 US dollars.
Clear. Okay. So
Yes.
is there
And this is
anything
real.
else?
It's not Mickey Mouse.
Is there anything else you'd like to say to the audience?
You see, I'm very, very excited because I don't care about what the world does outside. We today have created history because we've brought this high frequency trading to as little as $100,000 committed capital.
I believe that those interested should call you directly and discuss their risk appetite.
Before you do that, I'm trying to make everyone realize that in the market, there's no one offering high frequency for $100,000 committed capital. Nobody is. Because like I said, people don't want that kind of stress. The banks don't want that kind of stress. They're not interested. Anything less than 20 million, don't even bother me. I don't want that kind of stress. We are pushing our own buttons to prove ourselves.
So how do we contact you, Ashwin?
My email is ashwin@ppchk.net. On WhatsApp, it's bit.ly/algotrader. On Telegram, it's bit.ly/algofactory. And of course, WhatsApp, our channel, bit.ly/algowealth. Please subscribe and please follow us and you will see what we're about.
So do contact Ashwin if you have any further questions about high frequency trading.
Thank you so much, Destiny.
See you. Bye-bye.